Hello folks, this is Howard Reitzel from Invest Financial Corporation with our October 2013 video update. In this month's video, we'll discuss some of the events that moved markets in October and talk about what might happen in the days and weeks ahead. Please be sure to review the required disclosure statements. October was a volatile month for stocks as investors faced down the government shutdown, debt ceiling debates, and third quarter earnings season. Despite the turmoil, markets still turned out a very good performance, with the S&P 500, Dow, and Nasdaq all setting record highs. For the month, the S&P 500 gained 4%, the Dow gained 2.7%, and the Nasdaq gained 2.5%. The government shutdown, federal budget debates, and debate ceiling crisis dominated headlines in October. After lawmakers were unable to pass a 2014 budget bill, many federal agencies were forced to shut down operations on October 1st and sent thousands of federal workers and contractors home without pay. The shutdown dragged on for weeks as relations between the two parties deteriorated to the point that it seemed like no one could agree on anything. Lawmakers were finally able to resolve their differences in time to prevent a default on payments to U.S. creditors on October 17th and passed a bill raising the debt ceiling until February the 7th and funding the government through January the 15th. Unfortunately, this means Americans may be going through another round of bitter political fighting in the new year. While it's too soon to know the full extent of any possible economic damage, one report suggests that the 16-day government shutdown took a $24 billion chunk out of the economy. This may mean that a fourth quarter growth may slow down, and that people who lost wages may not be spending as much on holiday shopping. The Federal Reserve held a scheduled FOMC meeting at the end of October, but decided to delay the taper of its bond buying program for another day. This was not unexpected since the government shutdown caused a delay of economic reports and data collection, leaving federal economists without a clear picture of the current state of the economy. Third quarter earnings season kicked off in October, and thus far the story is one of profits fueled more by cost cutting and accounting acrobatics than by revenue growth. Even with lowered expectations, companies still struggled with a sluggish economy and weak global demand. Still, there have been some bright spots. The tech sector is showing strong growth, and smaller domestic firms are also doing well. Looking ahead, markets will turn their attention to the rest of the earnings season as well as economic reports for October. While the government shutdown muddied the data, analysts will be looking for signs of continued jobs growth and upbeat consumer sentiment as we head into the all-important holiday season. Once again, this is Howard Reitzel with Invest Financial Corporation, signing off for the month of October 2013. I hope that you found this commentary interesting and informative, and we'd love to hear from you to hear what you have to say. If you have any questions about what you've heard in this update or would like to discuss your personal financial situation, please give us a call at 812-323-9200, extension 7571. We'd be happy to talk to you.